Welcome to the study group QuickTake on Fuel Marketing Balance Sheet Trends. My name is Ben Salik, and I'm here with Dr. Jed Brewer. Jed, what's been the trend in fuel marketer balance sheets?
Well, it's a very good question, Ben. If you look at our study group members over the last decade, it's been a fascinating period for their balance sheets. If you see on the left-hand side of the graph in 2006, our typical study group member had about 40% of their balance sheet in equity, and about 60% of the balance sheet was held in debt. So they were levered up more than they are today. But if you look in 2016, way over on the right-hand side, it's really reversed quite a bit, where it's about 55% of the balance sheet is now in equity. So the majority of the balance sheet is now equity versus debt.
Well, that's an interesting trend, Jed. Why might that be?
Another good question, Ben. I think there could be a few different reasons that we see a strengthening of the balance sheet or petroleum marketers taking a more conservative structure. One, I think, is recession scarring. If we go back to this graph real quickly, you can see the Great Recession was in 2008, 2009, and that was a period when our study group members really became active in paying down debt and bringing on more equity onto the balance sheet. You can think of tight credit markets and so forth. Interestingly, in our industry, the Great Recession was actually a very profitable time period as crude prices fell dramatically and margins got large. So we didn't get pinched as much as many others, but I think a lot of our study group members saw the greater macroeconomic climate, perhaps had friends in other industries who had trouble, and said, hey, I don't want this to happen to me, so I'm going to go ahead and strengthen my balance sheet. But obviously that's not the whole story, because even as the economy has improved since the Great Recession, the trend of continuing to pay down debt and build equity has continued. So I think a couple other reasons may be, one, listed here is a lack of investment opportunity outside of the industry. It's been profitable. My firm's had a lot of cash flow. What can I do with that cash flow? Well, I can take it out of my company and invest in other industries. But if we look at stocks and bonds, for instance, on Wall Street, some would argue that they're in a bubble, and people don't really want to get 2% yield on a 10-year treasury note or so forth. So investing outside of my company may not be a great place. Well, I can take the cash flows and invest within my company and, say, make an acquisition in my industry. But a lot of our marketers who wanted to make acquisitions and have the balance sheets to do so and the cash have found those acquisition opportunities to be steeply priced, with the MLPs, the publicly held companies, the private equity firms that have gotten in and are paying very handsome multiples. It's been an expensive time to try to make acquisitions as a regional marketer. So if I can't invest outside of my business, making acquisitions within my business is expensive, but I've got a lot of cash flow, what should I do? Well, I'll just pay down debt, live to fight another day. So I would ask the people listening on this call, well, what has your firm done with its cash flows over the past few years? The good news is that marketers today are in a very strong position balance sheet-wise to be successful in the future.
That's great news. Thank you, Jed. If you'd like to find out more, you can visit us at studygroups.com. There you can learn how to share and collaborate with industry peers in one of our 50 petroleum marketer study groups to help accelerate your success. Thank you.